Hello traders, the title of the video is Elliott Trader Speaks. So I want to share a few thoughts with Elliott traders today, all right, because of last week, all right, so we can all move forward, all right, becoming better Elliott traders, all right. So recently, I have been talking about speculative Elliott wave count, and when we are using the Elliott wave principle without giving too much importance to the Elliott wave rule, meaning that our objective is to use the Elliott wave principle to make accurate trading decisions carefully. It does not mean that we do not understand the Elliott wave rules. It does not mean that we don't know how to apply the Elliott wave rule, but we have one objective is to use the Elliott wave principle, and it's all to make excellent decisions. And the purpose of that is to help some traders or Elliott wave traders that are having difficulties to use the Elliott wave principle or to validate their wave count. And also to draw the attention of traders to the fact that there are trading software out there are traders out there that are using the speculative Elliott wave count. Though no one is talking about it in the open place, I decided to talk about this so traders are aware of it, that there are machines, trading software out there, trading algorithms out there that are using the Elliott wave principle in a speculative fashion. So that may be something new for some traders. And some traders, when they watch those type of video, they will mark it down because they don't understand what is a speculative Elliott wave count. I also want to speak to traders that start using the speculative Elliott wave count. If you are a new trader, all right, I need to say this to you bluntly, and you get carried away, all right, and you get into this mode of I know it all, and I'm very good at trading. You can hit the wall, so to speak, which is not good. That's why I titled this video, Elliott wave Trader Speaks, all right? Because I've done it myself before, and it's a very bad thing, okay, to ignore the experience of a trader. Now, so if I give you one example, now somebody went for an interview, all right? The person went for an interview for a company, all right, for Google, for instance, or for Facebook, but that person has failed the interview. Will you agree with me that that person has a bit of experience when it comes to taking interview with that company? Yes, the person may lose, the person may not pass the interview, but the person knows what sort of question they will ask and what kind of format was the interview in. The person know a little bit about the interview. That person may fail the interview, but that person can tell you a little bit about the experience the person has gained through that experience, all right, through that interview, all right. So the experience comes. So sometimes I say things and a trader will disagree, and they found out later on that this is true. This week is one example when people may think that the market was crazy, but the market was not crazy at all. All right, so price goes up. They say Dow Jones goes up 300 something. Next day it went down 400 point, and then the next day it went up 300 point, and then the next day it went down 600 point. What's going on? And the people going all over the place thinking that what's going on. All right. So the point I want to make is this: all right? When we apply any trading strategy, all right, whether it's a trading system, all right, trading robot, all right, speculative Elliott wave count, or investing strategy, all right, if you are using them, all right, and you do not pay attention to the market patterns, you can go round and round and round and round and round. What I want to say also, if you ignore that advice, you can waste a lot of time for no reason. So those of you that are using the speculative Elliott wave count, if you apply the speculative Elliott wave count, or you do not understand what I'm saying or what we are doing, You'll come back every time to mark video down for no reason, or you may think that it's useless. So the exercise we were doing, we count here 1, 2, 3, 4, 5 here, and then it got a triangle. You see here? And we were expecting if there will be a continuation, it will be the third wave, isn't it? All right, here when we're here. All right. But I also say to traders that there is no continuation. It's not guaranteed that there will be a continuation in the Elliott wave count when we are talking about speculative Elliott wave count. So every day that you come, you should take it afresh. There may be a continuation, but don't bang on it. But it's just a speculative Elliott wave count. It's not a valid, okay, it's not a validation of an Elliott wave count. All right. So we were here. So why now the price gap down here and come all the way here? It's because of a market pattern. And that market pattern is on the 4-hour time frame. All right? You're on a 3-minute time frame, isn't it? Okay? So on Tuesday, we were talking about how to count internal wave like a pro, was it? And we were here, we talked about the fifth minor wave of the C wave of the flat correction. You remember that? So before we wrap the video, I was telling traders something very important. So I don't want you to forget this. Maybe you forget this time, but next time, please don't forget, because it's very important. I'll tell you a story. So before I tell you the story, on that Tuesday, during when I was recording the video, I told traders that this week, okay, Saturday, today, 24th, 25th, 26th, we have what? The G7 meeting in France. Yes or no? All right, I said it. And I say very often the market will behave in a funny way. And when we were here, though we see that C manner way, in a normal market environment, people will buy, isn't it? So we have 1, 2, 3, 4, 5. Then we have A, B, C. C here, people give priority to bullish signal above that level of 2, 5, 9, 6 C's, and priority bearish signal below it. That's normal. So they did. They bought it. It went up. So the next day you may say there's a continuation. You may say, well, the correction is finished. Now people bought it, it went up. But I said to traders, I was stressing on the fact that the market can come back down all the way here. Did I say here? That it can come down here first. And I said to them, because of G7, be careful. The market can come back down. And this was happened at the end. At the end, the market came back yesterday, went up 600 points, the Dow Jones. So why the price here now? This is it. The market patterns on the 4-hour time frame. You can learn about Elliott wave. You can meet the best guru. You can do whatever you want to do. If you keep ignoring the market pattern, you apply any strategy, whether overbought, divergence, trading system, TSCW24, but you keep ignoring the market pattern, you can go round, without, until one day you get really, really tired. I mean, I've done it myself when you that frustration, until one day I discovered that what the market is doing, just give me something that is true. That was it. That was the time when I discovered that market is doing only 3 things. That's it. And you need to, whatever strategy you apply, you must make sure you are not violating the market pattern. So if you go now to the 4-hour time frame, you agree with me. As I was saying to traders when we were recording the video or the speculative we were coming back all the time to the 4-hour time frame. And we were here, you remember? When we got this tail here, I said to you, well, you went up, okay, to this level. You see the red line in the zone of 26341 or 26417, that zone. All right. That we have, the market pattern that we have is a consolidation, isn't it? So we were saying to traders when we were here, we were saying the ultimate target is here. All right. So after we see that, I was recording that video on Tuesday, and we were on the 3-minute time frame, yes or no? And I did talk about my proprietary trading too. We were talking about all these levels where the price can go. All right? And you see, it's a high shot that it may come down. But the next day, Elliott wave traders were continue with this pattern, see where it ended, they bought it, they bring it back up to the top of the consolidation. So that's all right here. So Tuesday we were here, all right. Okay, Wednesday they push it up and the price stay here. You see, so it gap up on Tuesday, and then hung around here. 49 pp went up that day or something like that, and then on Thursday it gap up again. You see, now it went into the resistance zone of that consolidation. All right, and then from there it came down. The market that was the day it went up for 49 pips, something like this. So that was on Thursday, in fact. So it went up, hit the resistance, they sold it down, then it went back up again to go back to the resistance level. Look, Friday, price form, okay, it had a double top there on the 3-minute time frame. Can you see that? In the resistance zone, we have that, you see, here it is. So, and then they sold it down the whole day. They bring it back to the lower part of the consolidation. From the top of the consolidation, okay, to the lower part of the consolidation on the 4-hour time frame. This was happened on Friday, you see here. So from the top, they bring it back here. And if you go back to the 3-minute time frame, you will see, look carefully. Look, what's this? What's this? They came out. Some people came out and you see that the 5 minutes before the market closed, this is it. You see? So they came out because they know we are now at the lower part of the consolidation. So as I was saying to today, it's a consolidation play. And when you are applying the speculative area weight count or any other trading strategy, all right, any area weight validation, anything that you are doing, you must pay attention to the market pattern. Now, I'm choosing this example because it's very interesting. Now, you see the orange line here. This is what I was calling the opposite diagonal. Remember that? So the price is when we extend it, the price went to retest that opposite diagonal right there. And then from there, it crashed down. So they sold it big time on Friday because they could sell it from the top and bring it near the media line somewhere here. But no, they sold it, they hold it. But one thing you need to understand, this is very, very important, which is why I'm recording this video today, and I'm titling it, okay, Area Weight Trader Speaks. So next year, you do not forget, or in the future, you do not forget, very often, all right, I will say it to you again today, and you will promise me that you remember. Because one time, yeah, I'll tell you a story. I bought a Facebook stock. The position that I was holding was like almost 700 British pounds. And it was a time when they have the leaders were having a meeting at a G7 or G20. And I didn't pay attention to that because I thought that it has nothing to do with the market. You know? And I went out, I left my place, went to buy something. And by the time I come back, the position disappeared. It's gone. It's gone. And from that day, I learned from it. Anytime we have G20, G5, G7, whatever they call it, G8, whatever they call it, right? That week, you can decide not to trade at all. Or you can expect a bit of volatility in the market. What we have seen is that sometimes the market will consolidate. The reason why the market is consolidated is that now we have a balanced market. We are expecting a change. Those decisions, that meeting can create a new trend, a change of market sentiment. Therefore, the market is waiting. How the market is waiting? The market is waiting by consolidating. So this is something people, so no one knows what can happen. So it's better to wait. How do we wait? We wait by consolidating. So G20, G7, whatever they call it, right? When they are having them, just understand that the market can be really, really funny. And you check the market pattern, and you may decide not to trade that week, and you won't regret it. Or if you decide to trade it, don't have too many positions open, all right? And in fact, what I will recommend to trade, if it's better to day trade. So you come in, you see something now, you take it, you go. don't leave position open, because even if you have a swing trade position open, you can lose, because you see there were a lot of gaps. You see gap up here, gap up there, okay, gap down, blah blah blah. And the week before, this is the signal, because before the meeting is starting, the hedge funds are preparing themselves, the investment bank, so they'll start coming out of their long-term position, medium-term position, or they will be taking some profit, all right? So they may cut it down. They say. Because of the past, they are also afraid that a decision could be made that could affect the market one way or another. Or a leader may say something, just a speech, to change the market. You know that? All right? If a president speaks and says something, all right, and that can affect the market one way or another. So because of that fear, okay, the market will become very defensive. And very often you will see a consolidation taking place. So all in all, remember those important meetings, even if you are in your way trader, that will be good for you for long term. Remember, the market pattern will determine the appropriate strategy that you should deploy. At the end of the day, you see all the time, sometimes trader will understand the market pattern. Maybe they go on the hourly time frame, they are drawing the channel, which is good, or 2 hour time frame. But you want to connect the dots. So we are on a 3 minute time frame. Why did I go to the 50-minute time frame? It's very important, because there's a connection, there's a correlation between the 4 hour time frame, the 50-minute time frame, and the 3 minute time frame. And also between the 4 hour time frame and the weekly chart. If we go now, we see a consolidation on the 4 hour time frame. If I want to be a little bit more curious, which I can be, you can go to the weekly chart, because a consolidation on the 4 hour time frame, we want to find out what's going on the weekly chart. So that week you see here is a candlestick bar that got a shadow on the top here, and then it closed down bearishly here. All right, I have too many lines to investigate more the weekly chart for you. But if you look carefully, you can see that I have that brown pitchfork tool here. You see that brown pitchfork tool, and you can see this week the price went to retest that median line, and then it closed back down here. This is what's happening here. And it's now, okay, below the median line. So what the price has done this week, it break below that median line of that pitchfork tool on the weekly chart and retest it right there. And as it retest it, people on the 4 hour time frame or whatever lower time frame sold it down. This was happened this week. So first part, the first part of the week, the price was going up. You see, this is the consolidation that we see there, and then the second part, it went down. So you want to use multiple time frame trading method. So pay attention. Whatever you are doing, you can miss anything. But you want to see market pattern. So sometimes you may see 4 hour time frame is in horizontal channel, all right? And you may see now weekly chart. If you draw a channel on a weekly chart, what do we have here? It's a declining channel, isn't it? But the weekly time frame is higher than the 4 hour time frame. Therefore, even if you're on a 4 hour time frame, you are playing that game. A trader may decide not to buy at the lower part of the consolidation of the 4 hour time frame because of the weekly chart, because the weekly chart is in the declining channel. So a trader that is very defensive may say, well, the weekly chart is in the declining channel, it's a consolidation play. I will not be buying when it reaches the lower part of the consolidation of the 4 hour time frame. I would rather sell it because the weekly time frame is the price in the declining channel. So when the price reaches the upper level of the consolidation of the 4 hour time frame, that's when I'll prefer to sell it. You see, and again, somebody on the weekly chart that want to push it and understand more will go now to which time frame? Quarterly chart. So in order to become a better in-your-way trader, because I see all the time in-your-way traders getting very, very proud of themselves, which they can be, which is okay, because they can read the price, they can understand the price. They get into this kind of being very, very proud and confident, and they don't listen to anybody. So they will be insulting the Fibonacci trader, they will be insulting technical trader, they will be insulting investor, they will be insulting everybody, because they think that with your way alone, they own the market and they can focus. But that's not true. That's not true. You can't ignore other traders. There are other things in the market. So all my message to idiot traders, don't get into that scientific mode of using idiot. It doesn't work. All right, so this is it. Idiot trader speaks You have any question? So at the end of the market, you can see that this is reasonable behavior. You can expect that price was coming from the top of the consolidation. It reached the lower part. Okay, people will be coming out. Some people come out. Next week, we'll be watching again. Lower part of the consolidation. Are they going to take it back up again? Are they going to break below it? If you break below it, we project it down. Market geometry, one step at a time. If you want to apply speculative in your way count, all right, that's it. And so on, and so on, and so on, and so on. But this price move that you see on the 3-minute time frame from here all the way here, that's the consolidation play. But we were playing speculative area we count, see all kind of pattern. You remember? Same thing they did here. This move down all the way here, we were counting it. It's the consolidation play again. But we were doing our speculative area we count. But what I want you to do, don't forget the market pattern. If you see the market pattern on the 4-hour time frame, check the corresponding higher time frame. So you want the hourly time frame, you'll be checking the daily chart. If you are doing a speculative area way count on a 10-minute time frame, you'll be checking the hourly time frame. You'll be checking the daily chart, you'll be checking the monthly chart, and you can check the yearly chart if you want to. All right. If you are doing a speculative area way count on a 3-minute time frame, you'll be checking the 50-minute time frame. All right. The 4-hour time frame or 2-hour time frame, the weekly chart, the quarterly chart. All right. It makes sense, isn't it? That's how we do the speculative area way count. If you are doing a speculative area way count on 3-day chart, you'll be checking definitely the quarterly chart by all means. All right. If you're doing a speculative area way count, somebody was asking me to do it also for swing trading. We'll be doing that later on because I promised traders at the beginning of 2019 that we'll be doing a live area way trading. That's what we are doing now. Another trader said to me, Joe, you have to do also for swing trading. We will be doing it for speculative swing trading. All right, on a weekly, on a daily chart. So when we are doing speculative swing trading or whatever we are doing on a daily chart, all right, we are counting wave in a speculative fashion on a daily chart, we can ignore the monthly chart and the yearly chart, all right, and so on. So we want to connect the dots. Though, that's why we are saying to you that we understand the area wave principle. We know the ratio between, the correlation between the time frames, all right? We know the area wave patterns, all right? But now we decided to play with it. It's like a father that is a professional footballer is playing with his daughter in the garden. All right, he's not going to tackle his daughter like they do on the field, isn't he? All right, that would be crazy. So this is what we are doing when we are doing speculative. All right? We are playing. You are professional, but you are playing with people. It's like you are playing with the rules a little bit, just for fun, because you understand it. But while you are doing that, the mistakes that you don't want to keep repeating is to violate the market pattern or keep violating the market principle. Ask question like, where is the price headed? Now it went down from here, the top of the consolidation, the ultimate target, that's where we are now. Good. There will be buyers here. And if we see an opportunity to buy, we'll buy. So we will say to trader, priority to bullish signal above, okay? The lower part of the consolidation, 25461, all right? And so on, and priority to bearish signal below. Midpoint target, ultimate target. Work with the market principle. There are market principles. There is also area wave principle. But we can use the area wave principle in a speculative fashion. So all in all, the message today, don't forget the G7 or the G20 meeting, those weeks. Remember them, beginning of the year, note it down, all right? And know how it can affect the market. All right, very, very important. On Monday, it's bank holiday in London, which means, all right, we are not going to work on Monday in London. When one market is closed, it's a different story again. So if you are trading your money, remember that, okay? So this is about what I said to you at the beginning of this tutorial, that do not discount the experience. So some traders, they watch this video, they say, Joe, you are speaking to me. No, not to one person. It's a very important message to all traders, all right? Because I know that last week was not easy to many traders, And I just want to tell traders why the market was the way it was, okay? So they may understand it. So next time they don't get it next year or another time when something like this is going on, they may understand it, okay, and play it safely. That's all. So if you have any question or suggestion, please put in the comment section. And of course, I will be recording another video to answer your specific question. It was clear to me because of the experience that I had before that this week has a high chance to end bearishly, and this is exactly what's happened yesterday. Dow Jones fell down 600 points. It's not a surprise. It's normal for that particular week. All right. Enough said. All right. If this video has been totally useful to you, please let us know by giving us the thumbs up. If you dislike it, be sure to mark it down. If you think, George, you have done a very good job, okay, be sure to share it on the social media. All right. Subscribe to our YouTube channel. Our YouTube channel is 24 Elliott Waves in plural. Digit 2, digit 4, Elliott Waves in plural. All right. Be sure to click on the notification bell. So anytime we record a new video, you will be the first person to be notified. All right. So next week we will play it again, speculative area account, and we'll come back and review this session and show traders what has happened here. And Monday, because London is closed, all right. So probably on Tuesday we pick it up from Tuesday and see what's happening here. All right. Thank you for watching, and I will speak to you soon. Happy trading to you all. We are the TSTW SYS008 traders talking about Elliott Wave Trader Speaks. Thank you for watching, and I will speak to you soon. Happy trading to you all.